purchased goods for cash. So the two accounts involved in this transaction is cash and purchase. So purchase is an expenses. So it comes on debit side and cash goes out of the company. So it comes on the credit side. So the transaction is purchase account debtor to cash account return rupees 10,000. The next journal entry is purchase stationery for cash. So the two accounts involved in this transaction is stationery and cash. Stationery is an expenses. So expenses comes on debit side, cash goes out of the company. So it comes on the credit side. The journal entry is stationery account debtor to cash account to rupees 500. The next journal is purchased furniture for cash. So two accounts involved in this transaction is furniture and cash. Furniture is an asset and it comes on the debit side. It is an expenses, so it comes on debit side. The cash goes out of the company by purchasing the furniture. So the transaction is furniture account debtor 3,000 to cash account debtor 3,000. Next, cash sales. So two accounts involved in this transactions, cash and sales. So sales is an income for the company. So sales comes on the credit side. So automatically cash comes inside the out of sales, cash comes inside the company. So cash which comes in, so it comes on the debit side. Cash account debtor to sales account rupees 8,000. The same thing, cash sales also the same transaction for this account also. Next, cash sales from James. So two accounts involved in this transaction is James and sales. Sales comes in the credit side. So on James made the sales. So James comes on the debit side. So the journal entry is James account debtor to sales account rupees 2,000. Next, paid rent. Rent is an expenses. So the rent comes on the debit side. Cash which goes out of the company. So it comes on the credit side. So the journal entry is rent account debtor to cash account rupees 800. Next, paid salary. Salary is an expenses. So this expenses comes in the debit side. By giving the salary, the cash goes out of the company. So the transaction is salary account debtor to cash account rupees 8,000. The next one, freight charges. Freight charges means the raw materials which brought inside the company for production. So you can say it is a freight account, it is an expenses. So expenses comes on the debit side. So the cash goes out of the company by giving the freight charges. So the transaction is freight account debtor to cash account rupees 300. Next, machine installed for cash. So machinery account is an expenses. The machinery installation is an expenses. So we can say machinery installation account debtor 400 to cash account 400. The next one is paid wages. Wages comes under expenses. So it comes on the debit side. The wages given by the cash. So cash goes out of the company by giving the wages. So the transaction is wages account debtor to cash account rupees 400. So the journal entries purchase account comes on the debit side, cash comes on the debit side, stationery is an expenses comes on debit side, cash goes out of the company comes on credit side, furniture comes inside, cash goes out, so furniture account debtor to cash account, sales we are doing the sales, so sales comes under the credit side, cash sales, so sales comes under the credit side, sales to James. So it is a cash sales only by giving the name. So James account debtor to sales account. Rent is an expenses. Salary is an expenses. Freight is an expenses. Then wage is also expenses. So the expenses all comes under debit side. So it all comes under the debit side. Remaining cash goes out to the company. So the remaining transactions comes on the credit side.